In this chapter, we talk about the revenue recognition process and this five-step process that helps you recognize the revenue and how to allocate for it. So I want to walk you through this process and then help you through some of the more complex issues that have to go with revenue recognition. So let's look at this five-step process first. The first step is to identify the contracts with the customers. So identify those contracts with your customers. And over here I want you to kind of fill in what does that involve. And we need to determine whether there's a valid contract. Does it have everything needed? The second step is to identify separate performance obligations. So what does that look like? If there are distinct products and services involved, we want to look for those. And what I mean by distinct is, can they be sold separately from each other? That tells you whether they're distinct or not and should be allocated differently. So we want to make sure that these are distinct within that contract. Step 3 would be determining that transaction price. This can get more complicated based on how we separated those performance obligations. So we want to make sure that when the price of a good or service is dependent on a future event, so when it is dependent, then we want to make sure we need to estimate how much it's going to receive from the contract. And then we're going to look at how much revenue we recognize based on that. An example of this situation is going to be if you have a contract that's going to, you don't quite know exactly when it's going to get done, and maybe that contract price is based on how quickly the work is finished. The fourth step is allocating a transaction price to separate obligations. So typically, if you order something, you're going to see the price of the product, the price of the install. Maybe they're selling you anything on top of that, maybe some maintenance. That's what this is talking about. How can we allocate the total price to each individual separate part? We're going to allocate that transaction price proportionately to all the obligations. And we'll go through an example of that. And finally, recognize that revenue. It's the last step in this process. And we're going to recognize that revenue once that performance obligation has been satisfied. It's satisfied, I'll write this down, it's satisfied when the customer obtains control. So make sure you review. There's a lot more that goes into these 5 steps. We're going to practice a few of those. Just make sure you understand why they go in which order they do and what goes into each of those steps. So let's practice this. We're going to go through actually 2 of your homework problems today, because the hard part about this homework is not the recognizing of the revenue. You guys can review those 5-minute videos for those journal entries as to how we record that. But the hard part is looking at these problems, because there's so much wording involved, and pulling out the information that you need so that you can find what they're looking for. So again, we're going to start with what are they looking for, and then we're going to go back and find the information we need. So here we're going to determine that transaction price. So that means I'm going to go up, then read through the information, and then find the pieces that I need. So it says the contract is worth $200,000. I know that right off the bat. But then we can get a bonus of $40,000 based on completion. What happens is the bonus decreases by $10,000 per week for every week beyond that completion date. So they tells you a little bit about the company, and it tells you, given the constraints of his schedule and other jobs, there's 55% probability that he'll complete the project on time, 30% in 1 week, 15% in week 2. So what we're going to do is build a schedule based on that probability. So week 1, there's a 55% probability he's going to get done on that time frame. If he does, he gets that full, or in week 1, based on that $40,000, we're going to recognize $22,000 of that. If he gets done in week 2, remember it decreases by $10,000 every week. 30% chance of that. We're going to multiply that out to get 9,000. Finally, in week 3, we're hoping we're done by then. There's a 15% probability he will be done by then. It's going to decrease to 20,000. We multiply that out, we get 3,000. So the amount that we're going to record is that 34,000, but don't forget we have to add that contract price. We're only negotiating the bonus, so the total amount would be that full $234,000 that we would recognize. The second part of this question says, assume Jeff has work scheduled and decided to make sense to complete all his projects on time. That would be nice. Assuming he now believes the probability for completing the project on time is 90%, and otherwise it'll be finished 1 week late, determine that transaction price. So we're going to run through this again. This time, 90% chance he's going to finish and get the full $40,000. which comes out to $36,000. That means there's only a 10% chance he's going to finish after that. And that would be $3,000. So if this was the case, that bonus that we're going to recognize is $39,000 plus the contract price, giving us a total of $239,000. So again, it's a lot of words in this problem. Find those pieces you need, pull them out, and try not to make it more complicated than it is. Again, this one, a lot of words. They're giving you a lot of information for a very simple problem. What they want you to do, indicate the amount of revenue that should be allocated to the oven, the installation, and the maintenance contract. So here we're looking at, come back up here, we're looking at step 4, trying to allocate between these separate obligations within that contract. And what we're going to do is allocate that proportionately based on how much each individual piece is costing. So that's what we're going to find first. How much is each individual piece? If they only buy the oven, it's $800. If they buy the oven with the installation, that's going to cost an extra $50. So we're going to assign $50 to the installation. If they buy the oven with the maintenance services, that's $975. So that's going to be another $175 over the oven cost. And so that's what we're going to use for the maintenance cost. So the total of this, if I add these up, it's 1025. So now how we're going to find that proportionate share that we're going to allocate to each of those is we're going to take that oven price of $800, divide by my total, and then times it by how much they're giving the cash value to be. How much is this contract worth? If I read through, if the customer purchases an oven right here with both installation and maintenance services for $1,000. So my cash price that I sold this contract for is actually only $1,000. So I am going to allocate $780.49. For the install, we gave that a price of $50 because that's the additional charge for the install over the 125. We're going to multiply that by the 1,000 and get to $48.78. And finally, let's look at the maintenance. That was $175 times it by the 1,000, and we're going to get 170.73. I do want to kind of show you just what this looks like from a journal entry format, assuming that the install and the oven are delivered on the same day. That releases control to the customer, and that maintenance services typically are whenever they need it for the next year or whatever. So as a journal entry, let's look at what this would look like. We're going to debit our cash for that full $1,000. The oven would be sales revenue. We're looking at a piece of equipment here. That would be sales. The install would be a service revenue. Those are both credits. And then this maintenance piece, because we have not actually earned that yet, would be a credit to the unearned service revenue. That liability until they use it. For 170.73. That kind of just puts that in journal entry format in case you're comfortable with that, and it makes it a little bit more understandable. Again, they give you a lot of words, just setting everything up for you to get you down to that piece. Just as we have done in the past, I want to walk you through and show how these homework problems translate into exam type questions and what you can expect. So this first problem is just like that first homework problem we did, looking at a contract with a performance bonus. I want to just remind you that it might be a great time to pause the video, see if you can do this on your own after doing that practice, and then come back just to truly assess yourself to see if you're getting it or if you still need help. But to go through this problem, we're going to look at pulling out that information we need, that important information. This is a $750,000 contract. The performance bonus is $50,000, which is reduced by $10,000 each week. So what we're going to do is take that $50,000, multiply that by that first week to come up with an amount. The second week, we reduce by $10,000 to come up with an amount. Third week, we're going to reduce again, which comes to $1,500, and that fourth week is $1,000. Don't forget, we have to add in the contract price. Add that all up, and what you are going to get, if I did my math right, is $795,000 for A. All right, let's look at another one. This one, again, just like that second homework problem we did, talking about splitting out your transaction price between different obligations in the contract. This one's looking for the journal entry piece that goes with that. So not only knowing, do you know how to calculate this, but also how is it applied to those journal entries. So let's take a look at this. The total cost is $160,000. So I know that's the cash amount I'm going to get. I'm going to debit my cash for $160,000. The other pieces are proportionally allocated, and so we need to first find that percentage that they're getting and then put those into the journal entries. The equipment is going to be based on $100,000 over the total cost. If I add up those three numbers, it comes to $170,000. I multiply that by the cash amount that I received, and if I do my math, that's going to come to $94,117. Because this is associated with the equipment, I'm going to credit my sales revenue for the $94,117. Now I can look and see if any pieces of this journal entry are actually given. Then I would be able to stop and be done. I don't see those yet, so I'm going to keep going. The second part I'm going to calculate is for the installation. The installation is $50,000 of the $170,000. I multiply that by the $160,000, and you get $47,059. Now that install is a service revenue. These two revenues are recognized because the customer has control over these now at this point. And finally, I can look, see if that's in there. I don't see anything with that number, so I'm going to go ahead and move on to figure out how much the training piece is going to be, and to see if something fits or if I did this all completely wrong. So that training piece accounts for 20,000 of the 170. Multiply that by 160. I should get 18,824. Now that training piece, it's not really clear in this problem, but that training does go throughout the year, right? Because the training is kind of like a service that you're providing if they need help. So that would be credited to the unearned service revenue. That account until it is actually earned. For that full 18,824. I see that credit to unearned service revenue here, and then I know I most likely did it right because I can find that answer. One thing you do want to double check, if nothing's quite jiving out, make sure your debits equal your credits. You should not have anything that's close, kind of like in this problem where it's a rounding issue. So if there's something not there, make sure you go back and try again. As always, let me know if you have questions or if there's anything that I can help with.